just another day in lockdown. Hello everyone, trying to add some humour. There's a few interesting things happening on the day. Clifford Bennett, Chief Economist, ACY Economics, out in the park, enjoying the sunshine. I hope you can too. We have this roadmap opening up. I've referred to it in a couple of written reports as a little bit of more of a dirt track than a super highway, but it is an opening up. It will be good for the economy. The RBA today, yes, I'm a little bit out of breath. The RBA today said that it will maintain its tapering program as well as it should. It's way behind the curve, shouldn't even have bond buying. The RBA said it will continue to sit on its hands until 2024. What a great policy, eh? Isn't that really cutting edge stuff? Forward thinking. Not. But that's the central bank we have in Australia, so we have to make the most of it. The impact on markets, well, markets have been very volatile. In fact, the Australian stock market today was even more volatile than it has been recently. Tremendous swings in both directions. Towards the end of the day here, it is starting to look rather firm, wants to kick on higher. Of course, a lot of that is on the back of what happened in the US market. The US market, as I said in this morning's written report, very much about that day trader frenzy and some investment frenzy too, based on the fact that the debt ceiling had been, a can kicked down the road. And actually, what it means is they couldn't find a resolution to the debt ceiling. What it means is the US is merely freezing up in a political sense, struggling with the idea that it's just going to go tremendously more into ever greater debt. And why that could be a reason for buying the US stock market, I am not sure. But it was certainly taken as such on the day. And there was a little bit of support from the US new jobless claims. And that was very much, it was an improvement, but was still 25 to 30% higher than pre-COVID in terms of new jobless claims. So people are still trying to get work or losing jobs, not quite being able to manage it. So it's a very fluid employment situation in the US, and obviously out of all of this, it's hoped that eventually everyone finds the most efficient place for themselves to be employed, and that's a long-term boost to the economy. The economy is not quite there yet, and there's still plenty of supply chain disruption. There's still a worrying degree of cases, albeit deaths are more under control, thank goodness, but hospitalizations remain high. And one of the aspects of the vaccinations and the better care treatments that are available now within emergency departments around the world with a greater understanding of the disease, it's still high hospitalizations, but saving most lives. So the deaths will be down, but the hospitalizations will still be up, and that is the stress on the health system. New South Wales opening up, of course, new Premier, as I suggested would be the case, ever more keen than the previous Premier to do just that. The Australian Medical Association again and again says what we were saying at the very beginning: there will be a human price, there will be a health system stress as a result of this. But yes, of course, we do need to open up as well, because that too has its prices in terms of human health. Lockdown still has a price in terms of human health. So it's really between a rock and a hard place. The perfect path forward, no one knows. Personally, I just hope a little bit of care is taken, that things don't get too out of hand. And again, as I often do in these little podcasts or episodes, whatever that you call them these days, really do take personal care if you're fully vaccinated. You are not bulletproof, not by a long stretch. So do please recognize that and don't get too carried away. October 11th, October 25th, December 1st especially, in terms of all these opening up levels. Okay, let's get back to the main game. What's going on in the stock market, the US dollar, the Australian dollar? The Australian dollar reacted to the RBA news today as well. I forgot to say the obvious, that the RBA left rates on hold at 0.1%. Yawn. So I didn't think it was necessary to mention it, actually. Now, market reaction, Australian stock market is firm for a variety of reasons, partially that the RBA has again reiterated it will sit on its hands on rates till 2024. It's a ridiculous position for a central bank to have. All around the world, from Mexico to South Korea to New Zealand, people are already raising interest rates. So they're worried about inflation. The ECB is extremely concerned about inflation, and the Fed's starting to backtrack on its own previous view that it'll all be transitory. But our central bank, nothing to worry about. We're not going to do anything until 2024. The US stock market rally yesterday, as I said, a bit of a frenzy on that debt ceiling being kicked down the road, the can kicked down the road. Really, nothing's been resolved. It's not like the problem is fixed. It isn't. I guess people are hoping that because there's more time, it will be fixed. Well, I mean, 2 months ago, 3 months ago, Congress knew this was happening, Senate knew this was happening, and they still haven't been able to resolve it. And a lot of the conflict within these issues is increasingly among the two sides of the Democratic Party. So it's more complex than just Democrats versus Republicans, and that's something to bear in mind. I think we all know the political system in the United States is very bogged down in the minutiae and the horse trading on absolutely every bill they pass these days. So it's an extraordinarily difficult process. Equity markets, I just don't see that rally being sustained. I do believe it could kick on again in the US Open tonight. I do believe there'll be further relief rally in the European market tonight. I remember Germany hit a 5-month low and then has begun to bounce. It's still all very worrying in terms of the real world economic situation. We saw a very small survey out of China today, a PMI on services, etc., suggesting some growth. But that survey is very, very small. It's mostly focused on exporters. It's only about 10% the sample of the main official survey, PMI data. And that official data includes all the state-run enterprises, which are the bulk and the largest organizations or companies in China involved in manufacturing services, etc. So it's not really, it's kind of this nice little thing that we get every month, the Caixin survey, but it's not really what's going on in China. So just always carry that number with a small grain of salt. Elsewhere, we've seen Australia's building permits. They've had a big spike, but they've had 4 months of terrible data, so this momentary spike is great. In fact, all states expanded in terms of building approvals, except for New South Wales and Tasmania. So there's a little bit of hope there for the construction industry moving forward in the rest of Australia. But as we know already, the rest of Australia is a different story to New South Wales and Victoria. Things are definitely going to improve, and as the RBA said today, and they might be right, that Q4 is a positive number, but if it's a positive number, it's a positive number off a very low Q3 number, and it's not at all anywhere near the growth we had prior to the latest lockdowns. And it's also not growth that is likely to be particularly strong even into Q1 or Q2, because remember, as I've been saying for a very long time, what's happened with all the stimulus measures, and this is true of the United States and Australia as well, is the next 2 to 3 years of economic activity, not all of it, but a bulk of it, was sucked forward into the last 12 months because that's when you could get the tax advantages, that's when you could get various other stimulus measures to help you in your endeavours. So of course, anything you were planning to do in 1 to 2 years' time, you did straight away. So that's why we had such strong economic bounce back in many places around the world, but particularly in Australia. And going forward, it does leave a little bit of a hole. Now, how big is that hole? I'm not sure, but it is absolutely 100%, I would forecast to you, below normal trend. And remember, even before COVID hit in 2020, Australia's economy was already running at below trend. The only reason it's looked good in the last 12 months is massive stimulus, the highest per capita stimulus measures in the world, with the world's lowest rate of actual COVID cases. Hence, very strong economic data. But it's not necessarily suggesting that that's an economy that will be ongoing, because that economy is a little bit of a false economy built on all these stimulus measures, access to superannuation, all those other things, JobKeeper, etc. So they're not there now, and I think we should be concerned. I don't think we should be as optimistic as the Reserve Bank is, and I think a little bit of caution going forward is appropriate. That's why I'm still bearish the Australian stock market, despite the fact that it's having a profoundly strong run just now on the back of that US debt ceiling, on the back of the RBA not going to be doing anything till 2024, and that's all stock supportive. But in the end, companies have to be making good earnings and good profits. They've been able to price gouge. They've had freedom of pricing using the excuse of supply chain disruption of late, but that's really starting to wane now. That was a boost to earnings. Remember, I forecast that high inflation would lead to a sharp rise in corporate earnings in Australia and the US because it was the inflation was coming out of freedom of pricing, where you could raise prices without losing market share for the first time in 20 years. So of course, everyone was doing it from the corner store to the global corporation. That period has pretty much run its course. Now we're moving into the zone where inflation eats into consumers' buying power. And that again will be a negative long term on earnings. So we have a few factors out there, including continued high cases. And remember, localized lockdowns and particular restrictions will be brought back into place if the health system becomes overwhelmed at any point. And that is the great experiment that New South Wales is now involved in around the world: Israel, UK, USA, Singapore. It has been the case that opening up with high levels of vaccination has still caused significant health system stress. So the only thing it's going to happen, but the only thing that remains to be seen is how serious will be that health system stress, and will it be enough for things to be backtracked politically? Probably not, but it is a very real risk that needs to be incorporated into your current investment portfolio. Clifford Bennett, Chief Economist, ACY Securities. Beautiful Friday afternoon. I hope you're enjoying your Friday. It's very productive for you and you have a fabulous weekend. You never know how surprisingly great it just might be. Thanks very much and speak to you on Monday.